Macro meets crypto, Fed rate cuts, liquidity flows, market structure, and cycle dynamics all on the docket today for discussion. Hey guys, it's Keith Allen, and I'm back, baby. Oh my goodness, it's been a minute. Lots to talk about today, and I appreciate all the well wishes coming from the community. Had a bit of a family crisis taking us out of the scene here for a little while, but I'm back in the mix. I appreciate all the well wishes. You guys are freaking awesome. Let's talk about what we got to talk about. First of all, it's been a minute since I've done this, and I've got some updates on my software that I'm using. So depending on where you're watching and what link you grabbed, there are now two versions of this on YouTube. One is the wide aspect ratio TV looking horizontal view, and the other one is responsive for your phone. If you're watching on your phone, if your link took you to the wrong device, go to the YouTube channel, YouTube at KA Productions, and you can click on whichever version best suits you. So what exactly is happening in the market these days? We obviously had some volatility. Things stabilized a little bit, but and now obviously we're seeing a rally of some sort work its way into the into price action for Bitcoin and ETH specifically. Obviously, high tide tends to raise all boats, so we see a lot of stuff moving. But that's where the primary focus is at this point in this risky environment, I should say. We see a lot of capital rotating out of altcoins. So I'm going to, in this stream, we're going to talk about a few different things. We are going to obviously, talk about what's happening in the charts. We are going to talk about upcoming Fed rate cut, how price action might react to that and what it means. Some news that we might want to be paying attention to. And things that can affect the macro, like what's coming out of the Trump administration, and then a hot topic here, and I think it's one that is worth discussing at this point because we're kind of at this crossroads, right? The typical 4-year cycle. Historically, we're kind of in a time where we might be reaching the end of that. Keyword might. Or perhaps we're transitioning into something called a super cycle, which is where we extend where really the macro liquidity is driving things, and macro fundamental news is driving things more so than that typical 4-year halving cycle, just based on the the supply and the demand issue. So lots going on. Live chat is open. These are always better when you guys participate. So we enjoy having you. So by all means, chime in. Let's see what we're going to start. Let's start, I guess, on. You know what? I got a chart I want to start on that will kind of share where the money is rotating at the moment, and then we can talk about each individual asset. So let's go to this guy right here. Let me get a screen share up, and let's go to this one right here. Perfect. So this is a chart I've shared with you guys a lot of times. In orange here, we have Bitcoin dominance. In blue, we have ETH dominance. In green, we have stablecoin dominance. And the purple one here is total 3ES, which is total market cap of the top 100 coins, excluding Bitcoin, excluding ETH, and excluding stablecoins. So truly a basket of alts and larger cap alts, I would say. Here we can see a bit changing. I mean, not a lot, but in the last day or so, right? So we did see a weekend pump, obviously. Bitcoin dominance again hovering above 59.5%. dangerously close to that 60% range. I say dangerous. It's not really dangerous. Well, it's dangerous if you're an alt lover, but other than that, it's good for Bitcoin. ETH having a nice recovery here. And now that we have stable coin dominance retreating here, and it's retreating nicely since Wednesday, we do see a bit of recovery from alts as well. Alts just took an absolute lashing a couple weeks ago, right? I mean, we saw 60, 70% drawdowns. I think the last stream I did was almost 2 weeks ago. And at that point we had, I think it was Adam that dropped what? 99%. It went to zero, literally. I mean, like, look at this. So this is the stuff that you see in typical 4-year halving cycles. Bitcoin and ETH did not fall that far. So that's where we get into some question about this super cycle discussion. We'll get to that in a bit, but nonetheless, I think this is quite telling, and it's a chart that I like to look at often because I think it really gives us a good illustration. A very simple chart gives us a good illustration of where the money is going, and Bitcoin dominance has got some strength here. Maybe if it breaks below this, we'll see more of a resurgence from these alts, and maybe we'll see ETH rally a little bit more. In terms of what Bitcoin and ETH are doing, ETH is having a nice rally here, and you can see it's coming off of a support test that hit a couple of key levels here. It hit. This was that big dump. So when Adam had that 99% dump, ETH obviously didn't go that far. This was an 8%. Well, I mean, the range of this move was bigger than 8%, but the recovery. Let's see what the range of that entire move was. That was a 27% dump on the day. It obviously recovered to an 8% dump, and there's a lesson to be learned there. Right? If you're in one of these flash crashes and you don't have protection that gets you out soon, don't panic when you're at a nasty number like that, because more often than not, we see a recovery. Now, the fact that this went directly to test support at timescape levels, it bounced back. And again, we saw this retest of support here where the 21-week moving average had beautiful confluence with our yearly timescape levels. And those yearly opens are really, really important, in my opinion. So we had another retest here back to the 21, not quite as low. So that's a higher low here. Good to see this recovery now back above the 786 fib. And now we have one more timescape, maybe two. One more time. Let's see if there's a second one here. Yeah, so we just cleared the quarterly open. This is important, right? We're finding resistance here at the 50-day moving average. So can price stay above this level and then head to this last timescape once we get here? If we can take out this timescape level at which was the first weekly open of Q4, then we can set our sights back on going after an all-time high. I believe that 49.50 is not the all-time high for ETH. Whether we get there before the end of the year, whether we cross that before the end of the year, remains to be seen. A lot of moving parts in place. We'll see what happens. But in the short term, in the near term, I would be watching this very, very closely. Right? We have two key moving averages, really three of them in this range: the red 50, the blue 100, the green 21. Obviously, these are death crossed here, and the 50 and the 100 are, look like they're trying to avoid a death cross, and that's going to depend largely on whether or not price can move above this 50-day moving average. So be watching this. For those of you listening in the car, I do listen, right? I get some feedback from guys who say, hey, I listen in the car and I don't really know what the levels are that you're talking about, so would you mind referencing them? So here you go. And I would suggest that you put these moving averages on your charts. Put the 21, the 20 or the 21. I prefer the 21. put the 21, the 50, the 100, and the 200. Those, in my opinion, are the key moving averages that you want to follow, and they will serve as good benchmarks for you. The fact that we're above this 786 fib and we're above this quarterly open, those are very, very good to see. Again, it's not how you start, it's how you finish. This was an ongoing theme over the past 2 weeks. It's obviously some friction right here. And then once we get up here, we can talk about all-time highs. Bitcoin, let's look at Bitcoin. Similar set of circumstances for Bitcoin. It also had quite the pullback from the all-time high, but not nearly as deep as a lot of alts went, right? So same set of circumstances here where we have the 21-day moving average is crossed up with the blue 100 and the red 50. But we also, similarly to ETH, have this recovery of this quarterly timescape and these two moving averages here. So if price can continue upward and hold above this, then maybe we can golden cross the 50 and the 100 moving averages. And then obviously this would unwind too eventually. One more big timescape level up here, the first weekly open of Q4, and that's around 123,500. So that's where the next really substantial amount of friction is in the charts, and we can see that illustrated here in fire charts, where we have really the heaviest liquidity in predictable places. I view these as somewhat psychological, right? When we're talking about even numbers, the 120, 125, 125, technically not an even number, but I think you know what I'm saying, right? These every 5,000, 10,000 is a psychological level for an asset like Bitcoin. The fact that we have some technical resistance around 122.5, between 122 and 125, this is significant. And above that, obviously, the next big level is going to be that 130K level. We've already hit 127.5. It's not really, there's nothing technical at 127.5. There is something up in this range. And you can see liquidity is stacked there, over 50 million in ask liquidity around that 130K level. But when the market's ready to take it out, it will. So what are some catalysts that could do that? Obviously, we have a rate cut coming up, and we had one back in September, right? We had a quarter point back in September, and safe to say, almost 97% of the market think another quarter point is baked in here for October 29th. That's in 2 days. So that is some of the reason we're seeing this resurgence in price here, really across the board, is the market speculating on this. And it's not really a wild speculation at this point, but the market anticipating, I should say, a rate cut. So they're positioning for that. Now, because we've had some history with this, we know how things tend to unfold around these events. And it's a little bit different now, right? So the market expects this rate cut. It's baked in. So it's not like those periods in the past where we've maybe been waiting to see if the Fed is going to telegraph an upcoming rate cut. We know the rate cut is coming. I mean, it's a safe bet at this point that the rate cut is coming. And I guess it could be a quarter point, or it could be 50 basis points. But at the moment, it seems like sentiment is on that quarter point cut. A change to that, a surprise, might obviously stimulate some volatility. But I think what we're seeing here is one of those situations where it's, I'm not necessarily going to say it's a buy the rumor, sell the news event, because the news is positive, right? Rate cuts mean more liquidity is available in the market because people can borrow money lower. So that means when these rate cuts are baked in, institutions, hedge funds, and whales, they're not really waiting so much for Powell at this point. they're already rotating their capital in to at least to assets like Bitcoin and ETH. They may change after the cut, right? Or if we see some sentiment changes or some macro changes or some how should I say changes from the administration that have an impact on the market. This included. Okay, so in addition to this Fed rate cut, news today or late yesterday, I don't know, but news that the U.S. and China are coming to agreement on some terms for a trade deal. How many times have we heard this? And only for the can to get kicked down the road, and then for the administration to change the terms, and then China to come back and change their terms and stretch this thing out. I would say this when it comes to policy announcements coming out of the Trump administration. Pay attention to what they do, not just what they say. It's what they do, because they're often contradicting each other. And there's a history of this administration to say, oh, we've made this deal, or we have plans to do this, or we have an idea, or we have a framework. None of it is a deal. A done deal is a done deal, and it ain't done until it's actually till it's signed and it's done. And even then, the guy we have in the White House could change that deal at any moment on any whim, because he's like that. So in terms of, hearing news that there's a China deal about to happen, well, that deal hasn't been approved by Xi Jinping, and it's not signed, so it's not done. Hey, maybe they're getting close. Maybe they've got a framework that he will sign off on. But I would venture to say that this game that is being played between both China and Russia against the U.S. Is far from over. It's not one deal away from getting settled. These guys are trying to stretch this out. They're playing Trump like a fiddle, and it's probably going to get uglier before it gets better. In the meantime, when he makes these announcements, or anyone in the administration makes these announcements, they know how it's going to affect the market, and he knows that the market's going to respond well to this. So we could indeed rally into this. There could be some profit taking, but the real moves on moves like this, the real price action doesn't play out in hours after this. It plays out in weeks after this. So you really want to watch for the fake outs and the shakeouts, because the whale games are going to be played. And this particular rate cut is happening at a time where we're just days away from the monthly open. Now, that brings me to the quote unquote so-called October narrative. I warned you guys at the beginning of the month, don't get too married to the October narrative. As it turns out, at the moment, it looks like there is a chance that we end up with a green candle here, but this is not a strong, healthy looking candle at this stage. Now, there's certainly time for this to go in either direction, right? This could grow, get up here by the all-time high, maybe even make a new all-time high, and then you have a legit, I hate to say it, but October, right? But by the same token, it could easily revert and go the other way. At the moment, it's a whopping 1.34% growth on the month. That's not anything anybody's getting excited about. And I would caution you. There is going to be, in my opinion, let me just say this. I'm expecting bidirectional volatility between the Powell announcement of the rate cut and the monthly close, because we typically have volatility around those events, and the fact that these are happening days apart from each other creates more opportunity for that to happen, and those killer whales are going to be playing in on that. So be mindful of that before you get caught up. I would just say, if you have your plan, stick to your plan and don't get shaken out by the volatility that happens, or FOMO or FUD into something that you didn't plan on because of the volatility that's happening around these particular events. Now, in terms of what we might hear out of Powell. Yeah, his words tend to move markets, and we always listen for dovishness and hawkishness out of Powell. Keep in mind, his days are numbered. He knows he is out the door in March. That's when his contract is up. Trump was not able to fire him, so he's just going to serve his term, and obviously not going to be renewed. He is going to say, stay the course, stay slow and steady, take the high road, and do what he's always done. He's going to straddle the line without being too committing to too much in either direction. Now, whether he gives us more insights on inflation or recession fears, those are things that the market will respond to. So we'll be listening for that. In terms of the historical context of rate cuts versus what we see now, again, this is a little bit different situation, right? This isn't like the market is anticipating and wondering what's going to happen. We know what's going to happen. This is really a matter of, will this end up being a profit-taking situation, or that then sends capital rotating into ETH and maybe select alts, or is it going to be a catalyst to get things to transition to a super cycle? Again, these things come with time. We already know we've been in this bullish structure. So do we just get momentum to maintain this thing and move into potentially a super cycle, or does this really turn into a sell the news event and we see a big pullback? And how deep that correction goes is important to watch, in my opinion. It's noteworthy that we do have a new long signal on trend precognition in the weekly time frame. So this is a pretty solid signal here at this stage. Obviously, these signals can be invalidated before the end of the week, but this is a pretty solid start to it at this point. And 71 is actually growing in strength. This was at 67 earlier today. So this is looking like a really good signal here. And again, here's where we got to go. We got to clear this timescape level to get back into the all-time high discussion, and then hopefully reclaim this trend line. Let's see. So the other thing I wanted to talk about was this 4-year cycle versus super cycle narrative, and what's really at stake there. So the 4-year halving cycle, has historically defined Bitcoin over the years, but we're in a situation that remember we used to say a lot, hey, this time's different, or maybe this time's different, and most of the time it really wasn't. Well, this time might be different, and it might be different for a lot of reasons. The biggest reasons, and you could put these in any order that you want. I think they all kind of support each other. So at the top of that pyramid is going to be a crypto-friendly administration, which shapes the regulatory environment, which is still being defined, of course, but it seems to be moving in a positive direction for crypto, for crypto traders and investors, largely because the administration, meaning the Trump family, is heavily invested in crypto. So they're obviously going to be doing things that are favorable to them. That's one. Because of that, we've seen more institutional adoption. And I've heard a lot of questions about, or read a lot of questions about, whether or not there's new money coming into this game or not. We may not be seeing as much of it in centralized exchanges or even DEXs. But who do you think is coming into ETFs? I would say that's a lot of new money is coming into ETFs. And that's another thing that we can be watching here in terms of benchmarking what we expect to happen is ETF flows. Bitcoin back on the up and up with net positive inflows on Thursday and Friday of last week. I expect today will probably be similar to that. Little bit different on ETH. ETH had had a couple of rough days to end the week last week, but I think we're back positive here. We'll see how today ends, but I'm expecting to see some inflows. What's surprising to me, and as low as they are, it's surprising to me that Solana is actually getting the inflows. Obviously, these are much smaller numbers than we see in ETH and Bitcoin, but net positive is net positive. So that's something to watch as well if you're following Solana or other alts for that matter. Litecoin ETF was recently approved, so not sure when that one is going to hit. So those are all things that we can be watching. But in a 4-year cycle, we know that halving drives demand, whereas in a super cycle, liquidity drives the expansions, and that is largely driven by a lot of fundamental news, right? What's happening in the world, what's happening around trade deals, what's happening around geopolitical tensions, what's happening around tariffs, what is the general sentiment of the broader market. Obviously, stock market's doing very, very well. We're a bit anti-correlated lately, but maybe we'll see Bitcoin catch up to the stock market here sometime before the end of the year. 4-year cycle has that. I guess we could best describe it as a boom bust pattern every 4 years. In a super cycle, we have a sustained multi-year uptrend, smaller corrections than we typically have seen in Bitcoin's 4-year cycles. So in the past, we have seen some very large corrections. And let me remove some stuff from the chart and make it a little bit easier to see what some of those big corrections have been in the past. I've marked these a long time ago. It's been a long time since I revisited this, but let's see if we can share some of these bigger corrections over time that have been more symbolic of the 4-year cycle. A lot of times we've seen 30 to 50%. So seeing something that's 20 to 30% is not tremendously scary to me. I mean, look at this: 40%, 75%, 40%, 30%, 33%, 34%, 41%. Right? So what we're seeing now is significantly muted compared to that. So, I mean, it might be too early or too close to call at this stage. However, this is something to pay attention to, right? If we see another, 40, 50% correction, that may be indicative of the end for the cycle for Bitcoin. Whereas if we see 10%, 20%, 25%, that's not a big deal, in my opinion, anyways. So I look for shallower corrections out of Bitcoin. Now, I was not terribly thrilled to see CS making lows like this a few weeks ago. That ended up as 5% on the day. And this one was 6% on the day. So let's see what these corrections were, just to get a perspective. I mean, from this high, that was a 12% candle. It was 18% down to the low. Okay. So in my opinion, that is significantly muted to the 30, 50, 60, 75% corrections we've seen historically out of Bitcoin. So maybe that's an indication that we are transitioning towards a super cycle. So those are just some things to consider and some things to watch as we move forward. So again, to kind of recap what you're looking at to determine whether we are indeed coming to the end of a 4-year cycle or we are potentially transitioning into a super cycle, look at the depth of those Bitcoin drawdowns. Classic 4-year pattern has massive drawdowns. 30 to 75% is what I just showed you on the chart. Whereas super cycle would be shallower drawdowns, which is what we've seen more recently out of Bitcoin, not out of alts, but out of Bitcoin. Institutional flows, where's the money flowing? If we see money, especially those ETFs flowing back into Bitcoin and ETH, that will be a sign that we are heading towards a super cycle, right? Obviously, if they start selling, then that's going to probably put us into a deeper correction and be more indicative of end of cycle type behavior. So transitioning, and it's not just what happens today, right? We have a monthly close happening. It's what is going to happen for the rest of the year, quite frankly. And if we look at some of the indicators that we've seen for the end of the year, one is going to be looking at the quarterly trend precognition signals, which indicate that we could see a pullback here, that we're not likely to go much higher than this. This, in my opinion, is already a borderline, how should I say, invalidation, because we were right up here by the all-time high, but price pushback. So this is holding for now. But this would be an indication that we're probably that we're less likely to make a new all-time high here before the end of the year. And that doesn't mean it's over, right? Could mean that come January, we put the, step back on the gas. A lot of it, in my opinion, is going to be related to what's happening with, again, these trade deals, these geopolitical tensions, freaking U.S. Congress and government shutdowns and that mess. It was all well and good in the beginning when everybody said, no big deal. It's all smoke and it's all political grandstanding. It's going to end soon. Well, this one isn't ending so soon. So let's see what happens when that November 1st deadline comes. Let's see if those knuckleheads can come to an agreement, at least to fund the government for the rest of the year and go from there. But pay attention to that, because that does matter. Obviously, watching liquidity metrics of how stablecoin supply changes from here and grows. Incidentally, gold, obviously, and I'm just throwing in this topic because it just popped in my head, but gold has been surging, and I saw an article where Senator Cynthia Lummis, who's been a huge advocate of Bitcoin and is the one who put forth the bill to have the U.S. build a Bitcoin reserve, and she's on her crusade to have Bitcoin buy $1 million bucks, buy 1 million Bitcoin, or accumulate or acquire 1 million Bitcoin somehow, and discussion of doing it by selling some gold reserves. Well, gold is now at an all-time high. So with gold rallying, do you think that it is necessarily a time to make that move? I mean, you could argue that, hey, gold's at a high and Bitcoin is not. It's a good time to sell some gold and convert to Bitcoin. But it's going to be a hard sell argument to get Congress to agree to sell gold at this point. Now, there's some speculation, and Tom Lee from Fundstrat is speculating that gold's resurgence is perhaps influenced by the introduction of gold-backed stable coins. So that is a growing trend, and there may be some merit to that. So for you Bitcoin maxis who are like, what's up with gold? There may actually be some crypto influence into what's happening with gold. And for you gold bugs, that's you, Peter Schiff. I wouldn't be bragging so much. Um, it's only taken hundreds of years to get to this point, right? For gold. Anyhow, that's kind of the long and short of what I'm looking at this stage. And these are the metrics that we're going to continue to monitor, right? What is happening with stable coins? What's happening with the dollar and yields? So all of these elements come together, and they're all things that we need to be paying attention to try and come to some conclusions of where things are going, where we are and where things are going. And again, like I said at the top of this, we're at a crossroads. This very well could develop into a super cycle. And this is the first I've really talked about it, because it's really just now time to start talking about that. And so it's not by any means are we confirmed or validated in a super cycle, but it is something that could be developing right before our eyes. If it is, that's going to change a lot of the liquidity dynamics, and we will, as always, continue to monitor that liquidity. In fire charts, as you can see, we just now have a stack of about 27 million in asks that just came overhead. But you can see that there's some buying happening from whales, purple and brown whales, that may be interested in eating through this. So 115 is in jeopardy, in my opinion, at this point. As you can see, if we get to 120, it's a quick rip to get to 125. And whether you want to take some profits in this space or not, I would expect that we're going to see some sort of a how should I say, whale games inspired shakeout between the Fed rate cut announcement and the end of the month. If you're scalping or you're trying to do some sniping, there may be some opportunities in here. But if you're a long-term investor, just stay the course, man. Just stay the course. And I think you're going to be a lot better off when it's all said and done. Hope that has given you some insight and at least some things to think about as we move into the end of the month and the end of the year. I promise I am going to do my best to keep things moving and to get back on schedule with doing these live streams more regularly. Again, I appreciate all the support in the community, and I am looking forward to continuing to engage with you guys. Thanks again for the follows. If you haven't done so yet, smash the buttons, right? Hit a like, hit a share this with one of your friends, a fellow trader or fellow community member, and drop a comment in there. If you're watching the pre-recorded version and weren't able to engage live, drop a comment. I always come back and engage with those after the fact. Thanks again, guys. Here's to trading smarter.